In the Zoom session today, April 30th, 2020, we discussed the Chapter 10 Standard Cost and Variances. Chapter 10 is very similar to Chapter 9 in that you have to calculate variances, but it will be focused not on the overall revenue and expenses of a company. It will be focused on the three product costs we have discussed this semester, including direct materials, direct labor, and variable overhead. The variances you will calculate for each of those costs are titled price and quantity, or rate and efficiency. These variances are the same concept you used in Chapter 9 when you calculated an activity and spending variance. So the activity variance is similar to the quantity and efficiency variance. The spending variance that you calculated to see if you spent more than you should have is similar to the price and rate variance. The standard cost will be given for each of your homework problems. The standard cost is an amount that you should have incurred when creating your product in labor or price. You'll be given these in a per unit basis though, so make sure you calculate the total standard cost. The standards are the norms. If I'm making a product, we discussed in the Zoom session today, if I were making some leather earrings, there would be a standard amount of materials I should use for each pair of earrings. There would also be a standard price that I should have paid for my materials, for my leather. Sometimes businesses will pay more or less because of discounts or because of a higher quality of a product, but of the materials. These standards will be set up per unit before production begins. And then you will use this general model to calculate your variances. So the formula is used for materials, labor, and for efficiency, but they're going to change the title of some of the inputs and the name of the variances. So what I mean is when you are working on direct materials, this is the terminology you would see. But when you're dealing with labor, it wouldn't say quantity for your formula. It would say hours. And it wouldn't say price. It would say rate. And you would be calculating a rate variance. Did you pay your workers what you should have paid them for that amount of actual time? So the direct labor quantity variance would actually be called an efficiency variance. It will say actual hours times standard rate. Standard hours times standard rate would give you what is called an efficiency rate, which is the same thing as the quantity variance. One difference in this chapter is the terminology of the spending variance. In this chapter, the terminology for spending variance refers to the price and quantity variance combined. This slide talks about how your total standard quantity needs to be calculated. When you are given a standard quantity, it will be per unit. Therefore, you need to multiply the number of units given in the problem by that per unit standard quantity. The standard quantity will need to be calculated. Again, find the actual number of units produced and multiply it by the standard per unit quantity given. This is what I was discussing just a second ago, that the terminology for price and rate are the same, just being applied to two different cost figures. It's called a price variance when it's talking about direct materials. It's called a rate variance when it's talking about direct labor. But the formula would be the same. And then the quantity variance is used, that terminology, for direct materials, but it's the same formula that you would use when you're calculating an efficiency variance on labor and variable overhead. The last slide talks about how if your purchase quantity and your used quantity are two different amounts in the direct material problems, then you will have to recalculate the middle part of the formula. The actual quantity would be the purchased quantity when you're calculating a price variance, but you would want to use the used quantity given in the problem, or input the used quantity into the formula in the actual quantity spot if you are calculating a quantity variance. Next, I will cover question 5 from your homework. Okay, question 5 on your homework asks you to calculate initially the price and quantity variance. So the price variance says how much did your actual price of your quantity purchased vary from your standard price, but we need it in a total of the actual quantity. So really most of this chapter is being able to figure out which numbers represent those variables in that formula. Part A says that the actual quantity they purchased was the 25,900 pounds on mine. That's the actual quantity purchased. So I would use that in my formula as the AQ. The actual price per pound is $2.10. Now sometimes they will already have that multiplied together and just tell you a total purchase amount. So that's what I would do first, and I'm going to flip over to my Word document that says the formula I need to utilize is this red part here, because when I look at those two parts of the formula, it says I had 25,900 pounds that I purchased for $2.10 per pound. That represents my AQ times my AP. So I'm going to figure out what that amount is on my calculator. It says 25,900 multiplied by 210 gives me a value of 54,390. That was the total that I paid for that quantity. The next part of my formula would say I need to multiply the actual quantity by the standard price. And I will flip back to the question to show you where I found this data. This is the actual quantity times the standard price. When I do that math, it says 25,900 times $2.30 is a total of 59,570. So the standard price was found in the chart. Remember that one slide said your standard quantities and prices will be given on the problem at the beginning. Those are per unit. So it says I should have spent $2.30, or I could have spent up to $2.30 per pound. I actually saved money. So I know this is going to be favorable. But if I keep my formula in this consistent pattern, knowing when you have a negative number, you're going to be favorable. So really what it says in the formula, I actually spent 54,390. My flexible budget, in a sense, what I could have or should have spent was 59,570. So when I subtract those two values, it says my variance on price was 5,180, and I'm going to call it favorable. Now, another way to do this formula would be to look at those two sets of parentheses I have highlighted in red and factor out the common item. So you can reformulate this, and it would look like AQ is on the outside of the parentheses, AP minus SP is on the inside. So what it would say is that we purchased actually 25,900 pounds. We actually spent 210. We could have spent 230 according to our budget. So we saved 20 cents on each. So when I do that math and I take 20 cents, $2.10 minus $2.30, and I multiply that 20 cents saved, because that's a per pound savage, times 25,900 pounds, it gives me that same answer. This is just sometimes a shortcut. Sometimes it's just an easier way to see the problem. So that was our price variance. I'm going to work out the quantity variance now. So since we already did this section here, I'm highlighted on the top, in yellow there is how you would calculate your quantity variance. So the AQ times the SP, highlight it here, we have actually already calculated. We've done that math. So that's where I'm going to start my formula. I'm going to say this is the beginning of my formula for my quantity variance. I'm going to take that highlighting off. The next part of my formula says I need to find the standard quantity and multiply it by the standard price. The standard quantity needs to be in total. So your standard quantity is actually going to equal the units produced multiplied by the standard quantity given in your problem per unit. That is going to be the most difficult part for a lot of you. The units produced on this problem, 5, is given as 3,000. 3,000 units were produced. Each of those should have had 7.8 pounds of cleaning compound put into them, or materials for the cleaning product. It should have had 7.8 pounds of direct materials put into each unit. It wouldn't make sense to put 7.8 times 2.3 into my formula and leave that. That is the standard price I would pay for 1 unit. But we are analyzing how much we paid for 25,900 pounds, not just the price we paid for 7.8, one purchase of 7.8 pounds. So you have to take the 3,000 units given in the problem on part B and multiply it by 7.8, and that will give you your SQ. So you have a little extra math always on the SQ. 23,400 is the standard quantity of pounds that I could have used. Then it says, my formula, that I'm going to take that SQ, 23,400, I'm going to multiply it by the standard price, and that's going to be what I should have paid for the amount that I should have used. 23,400 pounds, and each of them should have cost $2.30. Says I should have spent and I should have used $53,820 worth of materials. That represents my SQ times my SP. I'm going to compare that to this AQ times SP. That's what my formula says. How much actual quantity did you use, and how much should you have used? So the final part of this problem would say you're going to take 59,570 and you're going to subtract 53,820, and this will be your quantity variance. 5,750. If you heard me earlier, I said if you keep it in this format, the negative numbers are favorable, the positive numbers are unfavorable on this quantity variance. And the reason is I could have or should have used only 23,000. This was the standard quantity, right? Pounds. Highlight that in red. I actually used 25,900 pounds. So I was not favorable with my product. And again, we could do that shortcut version. Maybe you like that. The difference in the pounds looks to be 25,900 minus 23,400. I overused 2,500 pounds. If I multiply that by $2.30, gives me the same answer of 5,750. And those will be the amounts I plug in to the homework problem for the price and quantity variances. 5,750, unfavorable is what we put. 5,750, you can see down here, unfavorable. Our other answer was 5,180. 5,180 favorable. Now we're going to calculate the labor rate and efficiency variances. The formula starts with your actuals. That's an easy way to remember it. A is the first letter in the alphabet. So your actual hours were 700, and the cost of the actual hours times the per hour rate equaled 6,300. So this is an example where they didn't give you the actual rate per hour. What they gave you was the actual hours already multiplied by the actual rate. They're saying equals 6,300. If you want to find that actual rate per hour, you could divide the 6,300 by 700 hours, and you can find out how much they actually paid per hour. So the next part of the formula says the actual hours multiplied by the standard rate is what we need to calculate. The actual hours was 700. The standard rate is found in the problem. Up here is $8 per hour. $8 per hour is what I would multiply in there and find that what they should have paid was $8 an hour for 700 hours. That would equal $5,600. So my rate variance equals 6,300 that I actually ended up paying in labor cost minus 5,600. So again, if you set it up consistently in this format, a negative number would tell you that this is favorable, but a positive number like we have is going to tell you that it is unfavorable. So they overpaid. They should have only paid 5,800 for that 700 hours of work. So it looks like it is a $700 rate variance unfavorable. Now, if I took 6,300 and I divided by 700, it looks like I actually was paying them $9 an hour. So that's my actual rate. I can see then very easily that I overpaid by $1 on each hour. So for 700 hours, that would be a total variance of $700. The next part of the formula says you take this calculation of your actual hours times your standard rate. So I'm going to copy that part. And that's how I'm going to start the next part of my problem. So then the next part of our formula, we'll need to calculate the standard hours. So when you're looking at the problem, remember the standard hours is not 0.3 for the total. That is per one unit. So you need to calculate the total standard hours. That would be 3,000 units multiplied by 0.3. each unit should take you 0.3 of an hour. So on your formula, when you're calculating the standard hours, it's going to equal the number of units you produced multiplied by the standard time it should take for 1 unit. So my standard quantity, or my standard hours in this problem, is 900 hours. I'm going to take that 900 hours, which represents the SH, and I'm going to multiply it by the standard rate of $8 an hour. That was our standard rate. And I would see that the last part of my formula equals 7,200. So then I'm going to compare this right here was actually the standard hours times the standard rate. I'm going to compare the initial figure, 5,600, which was our actual hours times our standard rate, what we should have paid for that many hours and how many hours we actually worked, minus 7,200 is what we could have worked up to 900 hours and paying everybody $8 an hour. So we were actually very efficient with our time. A negative number would give you a favorable variance. You saved 200 hours of work at $8 an hour, a total of $1,600 favorable on your efficiency variance. The difference of 700 and 900 is 200 hours times 8. That's the shortened version of that formula. It says we take out the common factor of the standard rate and we compare the actual hours to the standard hours. We find that we will get the same answer. 700 hours minus 900 hours will equal the same variance total. So those are plugged into the problem. Please contact me if you have any questions.